Hello and welcome to the look ahead for Wednesday, the 29th of January with me, Fiona Cincotta, Senior Market Analyst at City Index. So a busy day tomorrow. We've got Australian inflation data. In Germany, we've got the German JFK consumer confidence. We've also got the Bank of Canada interest rate decision, as well as the FOMC, the Federal Reserve interest rate decision, and also earnings from the Magnificent Seven, kicking off with Meta, Microsoft, and Tesla. And that all comes as this focus has been very much on AI this week, with the unveiling of DeepSeek's new, cheaper, more efficient, supposedly, AI model. So let's just jump straight in. So we'll be watching, first of all, the Federal Reserve interest rate decision. I mean, that's going to be a key focus this week. Obviously, it comes as Donald Trump has returned to power. We've not heard that much from Donald Trump as far as actually concrete policies so far, but the Fed is expected to leave interest rates unchanged at the 4.25 to 4.5%. That comes after they cut interest rates by around 100%, by 100 basis points across the latter part of 2024, with a 25 basis point rate cut in the December meeting as well. Now, we do know that the Fed will be slowing that pace of rate cuts across 2025. Policymakers have been quite vocal in that idea. We are not expecting, as I said, any move from them tomorrow, because if we think about what's going on in the US economy, we've got this Goldilocks scenario where the economic data is showing that growth is still resilient. We're seeing solid growth. We're also seeing the labor market showing a resilience that perhaps wasn't necessarily expected. And then we've also seen that headline inflation is ticking higher, but we're seeing underlying inflation is cooling. So that does mean that for now, the Fed are sort of in that position to pause. That's expected as well, whilst it gives them a little bit of time to understand potentially what Trump will be doing with key policies. But as I said, we do have that underlying cooling in inflation, which does just mean that we could be seeing a bias towards cutting across the rest of the year. So more or less, we're expecting 2 rate cuts from the Fed this year. That's what the market is expecting. It's what the Fed has also pointed to. So in a rather rare occasion, we're seeing both the market and the Fed aligned, but the focus will be very much on what the Fed sees coming up. But that's probably going to be a little bit difficult, without knowing really concretely what Donald Trump will be doing. So it just basically is buying them some time. So this is the Nasdaq that we're looking at here. Obviously, there is also, in addition to the FOMC, there is also earnings coming out from big players, Meta, Tesla, and also Microsoft. These come after we've seen this massive focus on AI this week with DeepSeek's latest developments, and basically this focus on DeepSeek's cheaper, new, efficient AI models really set the stage for a fairly frantic earnings season. So there's plenty of skepticism about whether DeepSeek's new model can actually do and perform as well as its peers, but it's definitely brought the attention to the idea of what the implications of a cheaper AI model could be, and it will keep the focus very much on AI as we head across earnings season. Now, it's just really interesting. We will have a closer look at the individual stocks, but I just think this is the Nasdaq. We saw that recovery. This is that sell-off from Monday that we've seen. We saw it found support on the 100 SMA. You see that long lower wick there on the candle. That does suggest that the selling demand at those lower levels was weak, which is why we saw that recovery back above that falling trend line. It's now sitting around the 50 SMA, which it's going to need to hold above, and that falling trend line it needs to hold above in order to extend gains towards the 21,900, which was last week's highs, and onto the 22,000 100 for fresh all-time highs. On the downside, we've got some pretty key support there at around the 21,000 level, which is also the falling trend line support, and then obviously the 100 SMA, which is also this horizontal support. So the confluence of those two does mean that it may be a harder nut to crack, and that's around the 20,700 level. So for now, it seems that the bulls are just pushing higher. We've got that support that seems to be holding. Just as we take a quick look now at the S&P 500 to see what's going on there after that crazy sell-off. Similar picture we can see. We've got that long lower wick on yesterday's candle, suggesting that selling pressure at those lower levels wasn't that strong. We're above the 50 SMA on the S&P 500. Buyers are going to be looking for a rise above 61,000 and 30 for fresh all-time highs. If we get a slightly more dovish sounding EC Federal Reserve, and we get some upbeat numbers from the from earnings from these Magnificent Seven as they kick off big tech earning, then we could find that the S&P 500 does manage to push back up to those highs. We've got momentum on side as well. So let's just take a quick look at what we'll be watching. Interestingly, Meta, I think it's worth noting Meta, they're actually expected to post revenue of 47 billion on EPS of 675, so some growth there. But look, it's trading at all-time highs. We actually saw Meta rise yesterday. So what's really interesting about this, because obviously we saw that sell-off in a lot of chip stocks and a lot of tech stocks, but actually Meta could potentially stand to benefit from potential lower costs for AI. And that's why we saw the rally in the stock. Now, we've heard that Mark Zuckerberg said that Meta will be investing between 60 to 65 billion in capital expenditures on AI in 2025. And it has plans to grow its AI team. Do expect to see a 5% headcount for lower performers across the business. But as I said, potentially it stands to benefit from lower costs if DeepSeek's developments do prove to hold up. As we can see, this the share price, as I mentioned, is trading at around its all-time high. If we just have a look at this phenomenal rally that we've seen in Meta, dating back to the start of 2023 when we had the year of efficiencies, I do believe, very long time ago now. But so that's what we'll be looking for there. Microsoft is another one that is reporting. Microsoft is reporting tomorrow. And as we can see, again, it's sort of recovered. It's continued the recovery. It's rebounded off that 200 SMA, which has happened yesterday. Now, interestingly, Microsoft has been really close to the AI boom due to its early relationship and the initial relationship that it has with ChatGPT creator OpenAI. It's pumped around 14 billion into OpenAI, which has been critical really for this startup's positive development. So again, the idea of a cheaper version of AI could lower capital expenditure, which would be a positive as far as Microsoft is concerned. They're expected to spend around 80 billion in 2025 for capital expenditure on AI. So again, it's going to be a very, very heavy cost for Microsoft. So just as far as earnings are concerned, expectations are for EPS to be of $3.12, and that's on 68.18 billion in revenue. Now, just having a look here, I'm going to take it out to the wider view of the weekly chart. Microsoft's had a phenomenal run higher, but actually we're just seeing now a slightly more, it sort of fell out of that rising channel. We're seeing a much more gradual increase. Haven't really made a higher high above that high that we saw in December. That's what buyers are going to be looking out for if we get some strong numbers, but it's finding some support from that 200 SMA. So buyers are going to be looking to extend beyond around the 450 level in order to bring the fresh all-time highs into focus around the 465 level. And then just finally, Tesla also reporting. Now, this is going to be a really interesting test for the share price, which has surged on news of Donald Trump coming to winning the election. If we have a look, we can see that run up from where the US elections were. Here we go, and run up to that all-time high there of, is it the all-time high? Let me just double check. Yes, it was at that 484, just there we go, at the 488 level. So as far as what to expect from Tesla, EPS is expected at 77 cents, and that's on 27.14 billion in revenue. So yeah, their fourth quarter earnings, they come though as Tesla disappointed with their deliveries in the final quarter of the year. It delivered just 495,930 vehicles globally, and that was missing estimates of 510,400. But it was above the 463 delivered in the last quarter. So total deliveries were 1.78 million in 2024. That again was short of estimates of 1.8 million, resulting. So you know, there have been some difficulties as far as deliveries are concerned. We've also there'll be a focus on margins, because we know that there was a particular cost-cutting price war that's going to be affecting margins. But also, I think our focus is going to be very much on the cheaper model that Tesla are supposed to be coming ahead with, because that could help Tesla really ramp up deliveries in 2025 and reach more aggressive targets. So as far as the share price is concerned, as I said, we've seen that phenomenal rally higher. This is on the weekly chart as it broke out of that triangle, hit that all-time high, but is now consolidating around this level here. We've got a support here in around the 375 level, which was the high that we saw back in April 2023. Also at the 50 SMA, we're sort of hovering around that level at the moment. I mean, the uptrend remains intact, but I think if we get a break below that 375, then we're going to see a lower low, which changes the structure of the chart. On the upside, looking for a rise above 435 in order to bring 488 back into focus. Another one just to keep an eye on is going to be USD, Japanese yen. As I said, we do have the FOMC meeting tomorrow, and it's quite interesting to see what's been going on here as well. We've seen that rally into the 6-month high around just below the 159 level. We've seen the price since coming down. We had the Bank of Japan hiking rates in Japan. And we've also had some safe haven flows into the yen, which has helped sort of build these lower lows since the start of the year. However, we're seeing a little bit of a recovery in the US dollar today. Trump and his trade tariffs remain a key question as well. So if we get a slightly more cautious sounding Fed, then we could see the pair continue to rise up towards that 156.80 level. On the downside, I'm going to be watching this level around here, 153.40, and then just below that 152.80. So around that 153 zone, we're seeing a support zone as well. So that is everything that I will be showing you today. I hope that you've enjoyed the session, and if you do have any questions, then please reach out. Otherwise, I look forward to seeing you.